Hey everyone, it's time for another holiday chat. This time we're going to get into the numbers and actually look at a sample business that James sent in. James, how are you today?
I'm very well, mate. Yourself?
I'm doing well. So, why don't you tell me a little bit about this business? What sort of business is it?
So this is a painting and decorating company, been around for quite a while now. Very established business. Gentleman is burnt out, so he's looking to exit, potentially, or stay on and continue working. So he hasn't quite decided what he wants yet. So whether or not I take a large percentage share of the company, or completely buy him out is still up for negotiations.
Okay. And what does his day-to-day look like?
So he's mostly doing all the standard management side of things with the business, as well as being out in the field doing painting. So he's doing everything when it comes to running the actual business. So it's not just being in the office; it is still he's pretty hands-on, and he's keen to get out of the management side and organisation. I think he's just had enough of running the actual business and all the everything behind the scenes as well. So I think he just wants to get back on the brush, really, take away daily
Okay.
stress.
So he actually wants to sell this, but he wants to continue working as a painter.
Yeah, because of the money he can bring in, he's open to staying on, because he's been with it so long and he's got some really great relationships. He's happy staying on for to continue generating his income, because he's only 56, so he's not in retirement age. So he's burnt out, he's had enough, so he wants to sort of sell it. And yeah, still continue if possible. And I said that's fine by me. Having someone who who knows all the people he want. He's even if I kept him on quoting and doing some painting, that works very well to keep the business going effectively. I wouldn't want to
Okay.
lose him when he's got that connection.
So we took the financial statements that you provided and we put them into the analysis template that I use with that's available to people in Business Buyer Advantage. And so we're going to go through and we're going to do a normalization here because one of the questions that you had was what is the discretionary income available here, right? And so we can see here at the top line, I'm going to make this a little bit bigger for everyone who wants to watch the video. Um, we can see here on the top line, we've got sales. So in 2023, they're down a little bit from 2022, but then we have rent receivable. So does he operate out of a building that he owns?
Yes, he does.
It's
So
a house.
no, it's a commercial property, and there's also some, um, what would you call them, storage lockers that he rents out
Okay.
as well.
Okay. So what we have then here is a corporation that owns real estate as well as running a painting business.
Yeah.
Okay. So what we need to do when we do a normalization is we've got to separate those two because the two assets are very dissimilar.
Hmm.
So we want to just look at the painting business. So I'm going to by putting in the numbers here, I'm adjusting out the income from the rental because we don't want to include any of the real estate aspects in this business. And then we've also got an interest income line here. So this is, interest earned on deposit to the bank or whatever, or maybe from clients who pay late. Again, that's not standard sort of revenue from 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 business operations. So we want to normalize that away. Um, in our cost of goods sold, we've got purchases. So this would be the paint, wallpaper, et cetera, that he's buying for the decorating. And then we have subcontractors. Um, these are the people that he hires. Is that right?
Yeah. So yeah, because yeah, he's booked solid with work at the moment. So yeah, he doesn't hire it has have anyone on his books. So yeah, he just gets people in to do the work. So that worked out well, I believe, during COVID.
Okay. What what is the operating lease? What is that for? Do you know?
Um, I'm not sure, to be honest. No.
Usually an operating lease relates to like a vehicle or maybe some equipment.
Okay.
I don't know if he's got maybe some machines that help him spray on paint or something like that,
Hmm.
depending on the types of jobs that he does.
Yeah.
Was there a list of equipment that came with the business?
No, that's the part that I'm waiting on for a bit more detail to these bits and pieces.
Okay. So there's a couple of different ways to conceptually treat an operating lease. Because usually an operating lease, well, there's capital leases and there's operating leases. So capital leases are usually for things like vehicles, equipment, and usually you pay them for a certain number of years, and then maybe you make a payment of £10 at the end, and then you own the thing.
Hmm.
And so those leases are really a financing scheme. And normally when we do normalization, we what we do is we add back depreciation and interest. And so a capital lease is essentially a blend of depreciation and interest when you make those payments every month because you're buying that piece of machinery over time. And
Hmm.
so an operating lease is usually you just pay for the time you're using the item. So this could be any number of things. And my guess is, given the industry, this might be the rental of things like scaffolding,
Yeah, makes sense.
right? So it is truly rental of equipment. So he picks up the scaffolding, sets it up for a job, rents it for a while, then it goes back to the shop.
Hmm.
And so this would just be an expense. We would just leave this on here. Um, because my guess is that's what it is. Um, Now he's got a rent expense here. So who is he paying rent to?
Um, Quite possibly that would be for it to himself. I don't know if he's separated the two, like the property and the company. I know that's quite a common practice in the UK. I'm not sure about you guys, but separating property and um, the business. So that could be for that.
So here would be my confusion then, because if if this corporation owns the building,
Mm,
then the rent income makes sense,
yep.
but it doesn't necessarily make sense for him to be paying rent on a building that he owns.
Yeah,
If a
especially if such a low
different,
amount.
yeah, if a different company owns the building, then it wouldn't make sense for him to be receiving rent there. The
No.
other company would have that income.
Yeah, I will check with that because yeah, that doesn't make sense for such a low amount anyway for rent.
So, and it is a low amount. So I'm going to assume that the building is in this property and maybe that rent is for something else.
Hmm. Yep.
Do you think there might be some other thing he's renting?
Um, yeah, there could be quite possibly be, and I will double check with him um what that would be because that doesn't make sense, the two of them.
So, under the assumption that this business owns the building, you have you been to the place where he operates from?
No, not yet.
Have you seen a picture of it or anything online?
Um, for that company, no, because I probably, if with regards to the building, I probably wasn't going to buy it anyway. He was happy to lease it out because I say there are
Okay,
stores in it, so it just
but what
depended
was
on.
he going to charge you? What was he going to charge you? Did you have that
No,
conversation?
haven't, no, because I haven't got to the negotiation parts yet. But it was just sort of, if I wanted to buy it, I could buy it. If I wanted to rent it, I could rent it. So,
So
it
this is important because I'm guessing that you would not be able to rent the building for £520 a year,
no.
right? So we need to normalize the performance of this business by adjusting the rent to something that would be more in line with a market rent.
Hmm.
So, and I know you haven't been there, but I'm going to ask you to take a wild guess and just presume or propose what a reasonable rent might be for that kind of facility. I'm guessing it's like a small
Yeah,
shop, maybe with a
let's
roll
go
up
for
door or
50.
something
Yeah, let's go for 15,000.
a year. Okay.
Just to be, yeah, to be on the safe side because so I'm not sure whether or not it would. take into account, say, me buying the actual units and stuff as well. So I'd rather err on the side of caution, and I can change that one.
Okay. So what I'm going to do then is I'm going to make an adjustment of 14,480 so that it raises our rent to this fair market rent to 15,000 a year.
Mm-hmm.
Um, and then you've got a bunch of regular expenses here. Insurance is interesting. It jumped substantially from 2022 to 2023. Do you have any insights on that?
No, that's a good point. Not sure.
Okay. And I mean, when I go through these numbers, whenever I'm looking at a new business, I've always got an email open or a notepad handy because this is when I look at these things, this becomes the list of questions
Mm-hmm.
that
Yep.
I want to go back and inquire on. So, and then repair and maintenance jumped substantially.
Mm-hmm.
Um, I'm guessing that, something major had to be fixed on the car or the van or something like that.
Mm.
So again, I would be trying to figure out what would a normal budget be for repair and maintenance every year. So there's a couple of ways you can treat this because it varies so widely. Some people will normalize it to a budget. They'll
Mm-hmm.
say, for this business, I would estimate that it really only needs 5,000 a year, for example, of repair and maintenance. And
Yeah.
in that case, they would increase the 2022 and they would reduce the 2023.
And what would you
But
do, obviously, if because if that's repairs and maintenance and he owns the building and I decide not to take the building, then would you just set that to zero? Because effectively that would fall onto him then.
well, whatever repair and maintenance belong to the building would go on there, as long as you're not going to be leasing it in a triple net lease where you would be responsible for repair and maintenance on the building,
No, I definitely wouldn't be.
right? So,
Yeah.
so you want to make that assumption. Let's assume that this is mostly building.
Yeah.
Let's um, let's take 8,200 off there, and so now we have 816. So we'll assume that these are repairs to the van or whatever. Um, admin salaries, there's only about 10,000 pounds a year.
Yeah.
Do you know who was earning that?
Yeah, that's his partner, his wife.
His wife. Okay.
Yeah.
So she is likely not going to carry on working for you for that little amount of money. What?
She only does, I think, one day. Well, I know she only does one day a week.
Okay.
So she
So
just,
if you
yeah,
were,
I think it's
what is
more
she
just
doing?
she's a partner, so she's on yeah, she owns part of the company, and I think it's more that yeah, she just literally just does a bit of admin once a week or a little bit extra if the owner needs it.
So what are you going to need?
Um, I was going to put in a manager to do a lot of this. I don't know exactly to what level. The idea would be to, because they're so booked up with work, I would want a manager slash painter or some kind of DIY person who I could offer an extra service to these people. Because he's like the company's got such a good reputation, it would make sense to say either get another painter or someone that I could just expand and upsell for the company to continue its growth. So effectively, I would be wanting to replace her with a manager paint of say 35,000, but then
Are
also
you gonna are you gonna work in this business full time as well?
no, I'm not. That I would just basically be doing or my partner would be doing the marketing, which wouldn't really take too long because that's like the background that
Okay.
she wants. So um
So so a manager of this business you're saying would earn about 35,000 a year?
yeah, that's yeah, and I'd say round about that. I wouldn't, slightly less, slightly more, but give or take.
Okay. And this manager would not need an administrative helper.
I don't believe so. From my understanding, it's I think it because of how he set it up, a lot of it could be. automated. The systems is in place are, it seems, quite old and not as efficient as it could be. So I believe that it wouldn't be hard for a manager to do that, and or me to set up the SOPs, etc. So it's all automated and made much more efficient.
Do you think that there'd be enough work for like a part-time virtual assistant or something to help the manager?
Um, I don't think there would be at this moment in time. Um, to be honest, I think that
Okay.
the amount of work, once it's automated, I don't think it will take up too much of their time. So um, it's mostly more like just a general day-to-day stuff,
Okay.
which I think
So
you'd be able.
then, so then you don't think that you would have this expense?
I wouldn't have the admin salary, but obviously I'd have the replacement management salary.
Mhm. So I'm going to adjust away the admin expense. Okay. The employer's insurance, is that related to that admin?
Uh, yeah, probably. Not sure.
Okay, we'll say yes.
Yeah.
Um, the motor expense, is that, does the business own a van or a truck?
Yeah, so it's got some vehicles, so that'd be for
Okay.
them.
And then the travel and
Mhm.
sustenance, that's food and lodging and things for
Yeah,
getting around.
yeah.
Okay. Telephone, computer expenses, printing and postage, sundry or miscellaneous, charitable. Do you know what sort of donations these represent?
No.
So the question here would be, are they personal? Like, is it a donation to his church?
Hmm.
Or is it actually marketing? Is it a donation to a fundraising event being held by a general contractor who sometimes hires him?
Right.
So if it's marketing, then you would leave it in here. But
Hmm.
if it's personally driven charitable donations, you would normalize it out.
Okay, let's
Um,
normalize that out because as yeah, I think the marketing will probably go under his advertising because he doesn't really do any marketing at all.
okay. So then he's got advertising, again, very small amounts.
Yeah.
Bad debt. So similar to repair and maintenance, people will sometimes recast or normalize bad debt to a certain budget or a percentage of sales. Like they'll make it 1% of sales or half a percent of sales.
Hmm.
Sometimes bad debts are so infrequent that people will normalize it away, saying this hardly ever happens. We're going to remove it. For sales of you know £817,000 to have a £518 bad debt, in my mind, is pretty immaterial.
Hmm.
I'm guessing most people pay him with a check or a credit card when he does the job.
Yep.
Do you know
So
what
it's
the split
related.
is between? Do you know what the split is between residential and commercial work for this company?
Mostly it's sorry, mostly commercial.
Mostly commercial. Okay,
Yeah.
and so he would be maybe waiting 30 days to be paid sometimes.
Yeah, 30 to 60, depending on the person. But say because he's been around for a very long time, from my understanding, my research, he's got a good reputation. So people do seem to pay him. So it's quite possible
Okay.
that he's just waiting on that.
So I would have a conversation with them about this, and
Hmm.
maybe you want to make an adjustment to that line. If
Yep.
if he has only had one bad debt in 5 years, I would just take it off,
Hmm.
right? As an abnormal event. But if it happens from time to time, I might even consider putting a budget in there of half a percent of sales,
Yep.
sort of a budget for bad debt every year. Um, Bank charges, that's probably just the monthly fee for having the account.
Hmm.
Legal and professional jumped from 2835 to 8400. So, you know, my guess is the annual fee for an accountant to do the statements and tax returns is probably the 2835.
Yeah. The
And
other
in
the
20
broker
20,
fees potentially.
I'm sorry.
I was wondering if the other bit could be broker fees for the because it's a broker deal, so that could be potentially that, or um, unless he's had done more due diligence or some or etc. for the accountants for selling the business. But I would assume I will ask him about that one. What the uptick is?
Yeah, I would ask too, because if it is accounting fees for getting the business ready for sale, I would add those back because they're not a normal part of the functioning of the
Hmm.
business. If
Yep.
it's a fee that he paid to the business broker for listing the business for sale, I would also remove that because
Hmm.
it's not a normal part of the function. Um,
No.
Normally, a business broker would add that back, right?
Hmm.
Because they should know that. So it's about 6,000. So I'm going to
Yep.
remove them, and we're going to assume that there's some one-time charges in there that are not part of normal operation. Now, if
Hmm.
it turns out he's been sued because of something that happened on a job site, that might be a little bit different. I would then ask, how often do you get sued? How often do you have to engage with a lawyer to, for whatever? Because if it is a more regular thing, then again, you might want to create a more regular budget. Look,
Hmm.
accountancy fees is on a whole other line than legal and professional.
Yeah.
So that legal and professional line needs to be investigated.
Hmm.
Um, the pension, that's for the owner?
Yeah. So it doesn't seem like he's taking a salary. So I think because obviously he's selling, like he's chucking all the money into the pension and dividends as well.
Okay. So if that's money for the seller, we add that back. Uh, okay.
Yeah. Where would
And then we've
dividends
got, sorry,
where would dividends fit on this?
dividends don't fit anywhere on this
No.
because dividends happen on the balance sheet. It's the removal of cash and equity from the business. So what we're doing here is we're getting to a level of cash flow called seller's discretionary earnings.
Yeah.
And um, that's going to be when we get down to the bottom, I'll cover that. But um, there's dividends are not an expense to the business. So they
I,
don't appear on the income statement at all.
okay. Yeah, no, because I was just wondering because obviously I wouldn't be taking the level of dividends necessarily that they're taking. That was just why I was asking.
Okay. So amortization and depreciation, these are non-cash expenses
Hmm.
for tax purposes, and depreciation as well, 16037. And most of this is probably related to the building as well.
Yep.
And then you have interest expenses, which we also remove because the way you're going to finance this is going to be different than how he's financed it. So the question that you had for me is what was the adjusted EBITDA of this business? And
Hmm.
over on this side of the ocean, we often call that seller's discretionary earnings.
Hmm.
So what we've determined here is that the seller's discretionary earnings for 2023 is 283,000 pounds,
Hmm.
or about 34% of sales. And in the prior year, it was 403,000 pounds, or about 40% of sales. So in looking at this business, we only have 2 years, right?
Hmm.
I like to see five. I really do, just to see how things change over time. But if we look at these charts, you know, in my mind, there's a big decline in sales here,
Hmm.
um, almost 20%. That's of concern. Um, his seller's discretionary earnings is also down. Um, if I was going to be looking at buying this business, given the size of the business and the performance, I mean, I would be making an offer based entirely, I would weight it 100% on the most recent year. And my offer would be tied heavily to future performance.
Hmm.
So I would want to see a sizable seller financing note. And I would have some kind of clawback language in that note with respect to continued performance. or I would make a smaller purchase price with an earnout component where he gets a percentage of revenue.
Hmm.
Because with a business like this, the big risk, of course, is that all of that goodwill or positive feeling that the people in the market have for this owner may not transfer to you.
Yep, agreed.
Yeah. So we have a little bit of time left. Um, what more did you want to discuss about this one?
So with if you back on the financials, if I well when I get the other years, you put in 100% weighted on that year. What would I put on the years before? Do I change them to anything in particular each year?
It's a great question. So when I look at the performance of businesses over time, if I see, and let me just make up some information here. So if I saw this, if I saw 600,000
Hmm.
in the 2019, and then I saw 800,000 in 2020, and then I saw 950,000 in 2021. Let's look at that graph. It would show, you know, sales. Oh, I accidentally put 60. Huh. There we go. It would show sales climbing year after year, and then a slight downturn,
Hmm.
right? And so in that scenario, I would be asking a lot of questions. Hey, what happened there? What's going on? Um, I would be trying to figure out what the change was in the most recent year. And I might be willing to spread out some of this weight a little bit. Like I might, only put 20% on the most recent year and do more of a flat average, for example, over the 5 years.
Hmm.
If the sales were declining every year, like if he was even busier in 2019 and 2021, like let's say he had done 1.5 million in 2019, and then in the pandemic year, let's say he only did 800,000, but then he did 1.3 million in 2021. In this scenario, he's got an overall downtrend with an abnormal year in 2020. So I would still, in this case, put all of my weight on the most recent year,
Hmm.
right?
Okay.
Just because I wouldn't have any faith that the business was going to go back up because the trend was demonstrating things were going down. If it looked more like this, if I had, I don't know, if I had 950,000 in 2019 and I had 700,000 in 2020, and then in 2021 I had 925,000. Oh, I put the numbers in. I put seven 700. There we go. So in this case, now my numbers tend to look like a bumpy sideways trend,
Hmm.
right? But obviously 2020 is an abnormally low year, and we know that that's the year of the pandemic, right?
Yep.
So if I was looking at this kind of result, I I might be tempted to put 25% on all years and leave out the 2020 year altogether.
Okay. Yep. Yep, that makes sense.
Yeah. Um, yeah,
So just
but I
going
mean
back
we don't know, we don't know.
yeah, no, that's no, that's cool. So yeah, going back to the dividend payment, like how because say I wouldn't be taking those dividends, how would that reflect in the financial statement that we were just looking at? Because, you know, if they're taking 50, 100, whatever it might be, thousand for their dividends, you know, I wouldn't be necessarily taking anywhere near that as the owner. And
Yeah.
then because obviously I can offset that with the salary that I would need for the manager.
So down here at the bottom, the seller's discretionary earnings or adjusted EBITDA, as they refer
Yep.
to it in the UK, for the most recent year is £283,000. And then
Yep.
you see the next line is the owner or manager salary.
Hmm.
And so when you remove that from the SDE, you get the normalized EBITDA, which is 248,000.
Hmm.
So that is the sort of the cash flow. It's a notional cash flow EBITDA after you've paid that manager $35,000. And there's probably some source deductions or payroll taxes that also need to be added to that, right?
Hmm.
So, you know, and I don't know what they are in the UK, but in most places it's like another 7 or 8 or 9% of a person's salary is paid by the company to various government programs. So you might have to adjust that. But what that leaves below there is 248,000 in EBITDA. So out of that money, you have to pay corporate income taxes. You
Hmm.
have to pay for any debt service that you may have, any debt that you've taken on that has to be paid to for the purchase of the business. And because we added back depreciation and amortization, you also have to cover any capital expenses. So if you wanted to buy new equipment, buy another van, all that kind of stuff, it's got to come out of that EBITDA number.
Yep.
And
So,
so if you wanted to take cash out of the business for yourself, for example, then you would be issuing a dividend and your dividend would come out of that number too.
let's say they're doing 100,000 in dividends, which I definitely wouldn't be needing, and then there's 35 for the manager, which would leave say 65, and then I only wanted to take 50. You know, still leaving 15,000. How would I put this into this equation or figure that out? Or do I just do that in my head to take off to add on 15 grand to the 248,000?
Well, I'm not sure what do you mean by add on 15 grand.
Um, so yeah, so if they're taking 100,000 in dividend payments for
Yeah.
themselves.
So don't think at all about what they're doing.
Mm,
The whole purpose of normalization is to figure out what it would have looked like for you if you had bought this business at the beginning of this period. So if you had bought this business at the beginning of 2022 and you didn't own the building, instead you were renting it for 15,000 a year and you didn't pay the admin and you weren't contributing to this pension plan and you weren't paying these amortization or depreciation expenses. This is what it would have looked like for you.
mm,
After you paid that manager 35,000, you would have had 368,000 pounds available. And then you still would have had to make debt service payments, pay income taxes on that money at the corporate level, right?
yep.
And what would that be in the UK?
What the tax level?
Yeah, for corporations, for small
Um,
businesses.
uh, uh, is that 30%?
Okay. So 30% of that would go off in taxes,
Hmm.
right? So about 100,000. So that would leave you with 268. And then you'd have to make any debt service payments out of that. So if there's a seller note or if you borrowed money from a lender, those debt payments would have to come out of that remaining 268. And then any kind of capital expenses, if you wanted to buy another van or buy any other equipment, that would have to come out of that budget. And then what's left is what you truly have discretion over. And then you would have to decide how you want to use it. You want to keep it in the company to build up the operating capital, or if you wanted to take part of it out, taking the capital out, that's a dividend.
Hmm.
And it doesn't it doesn't happen on the income statement. It happens on the balance sheet. So on the
Right.
balance sheet, all that happens is the cash would go down, for example, by 50,000, and the equity would go down by 50,000, or the retained earnings part of the equity section.
Okay.
So it's great. I haven't done a normalization exercise publicly in a long time. So
No,
it's a
it's good for
great
me
suggestion
because
for a call.
yeah, no, well, no, it's interesting because just listening to you sort of how you go through those bits and pieces, and going through with them, just sort of sitting, it's like having them sitting here with me. It's like, right, so well, why is this? Why is that? So it's good reinforcement. It's like, even just something basic like that. It's just a very small tip, but it's like, just to literally, why have you done this? Or what's the reasoning behind that?
Yeah.
Yeah, it's good to I think that's my biggest takeaway for today is, just sort of say having someone there, what you're doing questioning me is how I effectively should be questioning them as we go through it, which is great because, say, for the next meeting, that's exactly what I'm going to do.
Awesome. All right, James. Thank you so much. I
Thank
hope you have
you.
a happy holiday.
Yeah, thank you, Canada.
Okay. Bye bye.
Bye, cheers.